All right, it's 1 minute past, and now it's time to bring you up to speed with the action. Redmond, do you want me to kick off today?
Yeah, sure. And I think, are you sharing a slide, Jessica?
Yes, I'll just get underway.
Yeah.
Well,
And
Redmond uses his microphone.
yeah,
So
okay.
let's
Yeah,
pause and reflect on some of the key market moves before we touch on what to watch this quarter. So as we can see here, we do have an exceptional run from the Nasdaq 100, and as we've been speaking about, the top 100 tech stocks have, I guess, been essentially seen as a safe haven. And that's because a lot of companies in the NASDAQ 100, including Microsoft, including Tesla, have been mapping out a path for higher profitability. Not only have some of these companies made a lot of job cuts, but I guess if you think about a lot of these names, they're indeed in some quality ETFs, and quality ETFs have garnered some of the most flows globally. So that essentially means there is, I guess, price support being put under these NASDAQ 100 names. If you also think about Microsoft, they do have a lot of ongoing income from their cloud revenue business. And look, regardless, if we have a recession, you'd think that most people would want to keep their Microsoft accounts up and running. In terms of commodities, down the bottom, we can see overwhelmingly, we saw last week, Brent make one of the most sizable moves that we've seen for some time. That being said, though, if we step back and take a look at the quarter, it was interesting to reflect, although you can't see this here, over the past quarter, we've seen iron ore gain the most momentum over the past 3 months. But this is just looking at last week here. We also saw gold hit new higher highs last week. So we saw the gold price in Australian dollars hit a brand new record all-time high, while the gold price in US dollars, which is the most commonly traded gold price, that actually was just a whisker away from a record. Nevertheless, it was at a record. In terms of FX moves that we saw, I guess one of the most talked about FX pairs over the past quarter, and indeed last week, was the euro dollar. And the euro dollar is essentially being supported against the USD on the back of the European Central Bank, I guess, having a little bit more weight behind it and ability to keep rates higher for longer in comparison to the Fed. Well, I'm sure if you've been reading Redmond's commentary and our team commentary, you're probably well aware, as we've been reporting, that the swaps market is only predicting a 50% chance that the Fed can actually hike interest rates later this month. But that's Redmond's sweet spot there. Redmond, do you want to take the next slide?
yeah, sure. And I think last week, I think it's very important to look at is really the Fridays. We have the PCE number and PCE number from the US, and it was the headline was slightly lower, down to 4.63%, and from last month 4.7, and also expectations also looking for 4.7, so slightly lower, and also, and then the core or PCE, that is the Fed's most watched inflation gauge, is down to 4.6 free, and you can look at from 4.6 and down from 4.7. And yeah, and also is I want to mention is the monthly month on month is also slightly lower at 0.3. And so one thing is that the core services PCE excluding housing, and for the month in February, is the month on month is 0.27%, and that was below last month for 0.49%. Even though the year on year is take up a little bit, but the month on month momentum is came down a bit. So all in all, the PC number last Friday was was on the softer side, and that gives some comfort. And you see the bond yield down about 8 basis point to 11 basis point across the curve, and mainly yield came down more at the 5-year segment. And then it's basically for the whole day throughout New York section, yield has been coming down. So that lower yield has been supporting stock market last Friday, and you see S&P up 1.4 and Nasdaq up 1.7. And I think here we so we think that is the market may be pricing a little bit too much too early a rate cut, and we think that it's probably the rate cut will come later in the year. So we will be we will be cautious about some volatility. But in the meantime, I think the market is quite has calmed as the banking sectors and has calmed down a bit, and also still looking for the Fed may pause and even cut rates. We think the Fed probably will pause and very soon, and but probably they are not ready to cut rates yet. And then on the next slide, I want to show is last week is another thing is more a key is in the market is the China's PMI that the manufacturing PMI came in at 51.9, even though slightly lower than the month before, but it's still well above the 50 threshold, indicating expansion. I think the key thing is really on the non-manufacturing. It surged to 58.2, and especially services also, not only just construction, but services also did better than expected. So basically the PMI numbers from China showing the recovery is going on, and then the services also bounce rather good. So these are the two things. I think the key things from the macro front. Also, additionally, so in Euroland, that the headline CPI also came in softer than expected. So that is also help stock market. And then back to China, Hong Kong. Another thing is last week we have Alibaba and is planning to reorganize into 6 different separate business units. We think that there's not so much a change of China on the Chinese government's regulatory framework, but it's more like I think Alibaba and the authority probably is now is going to the next phase of this kind of regulations of the internet sector, and that is, I think we think that the development is positive, because that we remove some of those regulatory uncertainty, and also is that we release some of the conglomerate discount and improve valuation. And then we see also other internet conglomerate like JD.com is also planning spinning off of 2 of the units to list in Hong Kong, and Alibaba is also planning to IPO their China logistic arm, and there probably will be more to come. That is basically will be good and for the overall sentiment in the market. And Peter Gandhi last week actually Strategists put a notes, and we see there's the momentum is building up in China technology and consumer stock, and we have a film basket on the platform, and investors can take a look, and in fact it has been performing. This sector has been performing rather good relative to other sector. This film seems we see some more momentum in this theme. I will pass it back to you, Jessica.
Thanks, Redmond. Just picking up where you left off, just in terms of reiterating Saxo's bullish view of markets. So absolutely, as Redmond was just pointing out, that we do see we do see further upside in the markets, and that is underpinned by the market essentially forward looking and preempting a cut. But as we said, we don't see a cut. But we more see a pause. But nevertheless, that is a reason why we're increasingly on the platform seeing clients that are buying the euro against the USD, simply on the fact that the ECB has got more propensity and ability to hike versus the Fed. What we can see here is returns year to date. And earlier we touched on some of the commodities, and Redmond's just touched on one of the baskets that we've been highlighting. And what's really interesting is to the top right, we can see that semiconductors have actually garnered the most flows in terms of Saxo's equity themes year to date. And if we think about semiconductors, so I guess one of the clients, or one of the rather stocks that has really stood out is Nvidia. So Nvidia has seen a phenomenal gain of 90%. That's 90, just phenomenal. And this is on the back of course, China's economy reopening, but of course the company expected to make a very large recovery in their income. So that'll be really interesting to see what actually does take place when they announce their quarterly results next month. What is also really interesting, though, if we have a look at the very top, we've been speaking about so cooling inflation. So what's really interesting is it's not only cooling inflation, but most economic indicators have actually given off a more positive read than expected. And so there's something called the Economic Surprise Index. The Economic Surprise Index is at new highs, and this is basically because data is coming in better than expected, and that is supporting the risk on rally. So that is why we are seeing over the medium term more upside, but a cautionary approach. We're seeing clients put in protective puts in case we do see a downside or further, I guess, volatility. So yeah, so we are seeing more longs on the platform. So in terms of trades, in terms of the NASDAQ 100, that's been one of the most purchased indices on the platform. And in terms of E-minis in the futures space, the NASDAQ 100 has also year to date seen one of the most purchased or the most bought trades in the NASDAQ E-mini futures. So that's really interesting. But as we mentioned, clients are being quite cautionary, putting in protection in place. In terms of the thematics, as we can see on the top right, towards the just down from underneath semiconductors, the luxury theme is also continuing to gain pace. So we can see that's almost up 19%, or rather 20%. The other thing that is also taking place is taking a step back and just thinking about what we are seeing across markets, not just on the Saxo platform, but what we're actually seeing is that the most purchased ETFs globally have been in number one, quality ETFs. So QUAL, that ETF has seen $7.3 billion of flow. So that's really quite interesting, and that speaks to the fact that investors are bunkering into those NASDAQ 100 names. So we've seen clients buy those on the platform, and they're also buying ETFs as well. So the Qual ETF includes those names like Microsoft, Apple, and Nvidia. Stepping back, looking at the entire market as well, even further, taking a much larger brushstroke approach. We've seen a lot of money rotate out of bank deposits amid the banking turmoil. And a lot of people, I guess, have been losing trust in the banking financial system. So we've seen investors actually and market participants rotate out of bank deposits and go into bonds. So bond flows across the entire market have increased to $304 billion over the past 3 weeks. And then in terms of how that's translated on the platform, so we've increasingly seen a large amount of clients actually buy treasury bonds. And then in terms of ETFs, if clients want to invest in ETFs, bond ETFs, we've actually seen another very large amount of flows go into bond ETFs. So in terms of dollars and cents, it's actually $6.1 billion of bond flows have gone into the 7 to 10 year government bond ETF called IEF. That's India Echo Foxtrot. So just some interesting insights there to share with you. In terms of the economic news to watch this week, Redmond, do you want to touch on what's coming out of China? People can see on the screen what's coming out from China today.
Yeah, I mean, we have Caixin manufacturing PMI today, and I think more might be more important from the US, and we have the ISM manufacturing index, and that probably will slip further to 47.5, further into the contraction territory, and last month 47.7. So but I mean, it's I think investors probably will be watching also the subcomponent, the employment and new orders, and to see to see how the U.S. economy is doing. Yeah, but I think this week is I think the ISM, and then of course is on Friday we have the payroll number, and Friday is U.S. equity market is holiday, and then we have a half day in bond market.
Yeah, nicely said, Redmond. Just also really important to also pause and just quickly reflect so we don't keep you too long. Look, inflation, as we said, as Redmond said, inflation has come down quicker than expected. But with what Redmond's saying, just really driving that home. Look, the Fed can potentially go lighter on rate hikes, but if we do see hotter than expected jobs numbers, that could cause pressure on equities. So just be mindful that we could potentially see some profit taking in equities, just on the back of what you can see here, on the back of the jobs report, the JOLTS report out on Wednesday, and then later in the week on Friday. Also be mindful of public holidays for Easter. Also, we can see that the Reserve Bank of Australia does meet on Tuesday. We put out a piece on Saxo's platform, basically mapping out on why we expect the RBA to pause. So that is something to keep on your radar. That essentially means potential downside for the Aussie dollar against the US. So keep that in your back pocket. And last but not least, I'd also like to mention it is a pretty quiet week. I guess some would say the B word, B for boring. I guess in terms of market moves that are likely to reflect or moves in the broader sectors, we do have Constellation Brands. So they're one of the largest brewers across the world. So their results will be out on Thursday. But I do think it's really important to also pause and reflect that April, we're in the April month now, kicking off a new quarter. April is traditionally the best month for equities across the entire 12 months. Now, reflecting on why this is, well, we saw a lot of fund managers, and we see a lot of fund managers, sophisticated investors, take money off the table and take profits out of the market at the end of quarter. And traditionally, some of that capital is put to work in April. So that's another consideration for you. Just be mindful of volatility. But as we said, we do see further upside in markets, but recommending a cautionary approach. I guess on behalf of Redmond Wong, our Greater China strategist, and myself, Jessica Amir, we wish you a very happy and safe week ahead. And be sure to tune into our daily commentary on Saxo. For any questions, feedback, or comments, please reach out to your relationship manager or your global sales trader or anyone at our call center, or why not reach out to us on Twitter. Thank you so much. Have a wonderful day and a happy and safe week ahead.
Okay, bye-bye.
Bye for now.